going to, even if we legalize everybody, it's not going to prevent this, but it will soften it. It will soften it, but it will not prevent it, because that's already in play.
The long-term investment is a bad idea just to...
Oh no, they're good. You're going to make more money on the downside.
Long before 20 seconds.
Well, roughly, but here's what I can tell you, folks. And by the way, what's my prediction on the Dow? I've been saying 2,000 to 3,000. I'm thinking I'm very optimistic at this point, okay? But I've been saying 2,000 to 3,000 on the Dow. I could be very optimistic at that point. But here's what I will tell you: if you and I decide to do what's right in this country, if we decide to start getting politicians who do what's right, not what's popular, but what's right for all of us to win, if we decide that we want to do that, and we can, then here's what I can guarantee you. This move, America's never seen anything as big as that. That move, America's days are still ahead of it. Okay? That move will be a phenomenal move to the upside. If we all agree today that let's do what's right. Let's do what's right. Okay? And unfortunately, we've got politicians that are not doing what's right. Okay? It's not the right thing to do. So, you look at cycles, you look at history, and history tells you everything. History tells you every single country who's ever tried this has gone bankrupt. Every single one. If you start printing money to handle your debts, every single country, I don't care if it was Greece back, 1,000, 10,000 years ago, Egypt, 5,000 years ago, every country that's ever printed money to get out of debt or to handle their debt load, they've all gone bust. What are we doing now, folks?
Printing money.
So we're printing money. $2 trillion in the last 2 years.
But haven't the Japanese been printing for years?
Not as much, though. Not as much.
They're
Because the U.S. is still the reserve currency of the world, you see. So how long it'll be, I don't know. See, everybody knows. Even Warren Buffett the other day came on television and says, technically the U.S., once they downgraded our Standard & Poor rating from AAA to AA, he said technically the U.S. can't go bankrupt because we can always print more money. Yeah. He said, so we can't go bankrupt because we'll just print more money. And then, but the very last thing he said was, now, of course, that leads to inflation, and then he stopped.
Yep.
Any of you ever heard of what happened to Germany right before World War II, the inflation rates?
Hyperinflation.
It was hyperinflation because they were just printing money and printing money. It took a cartload of money to buy a loaf of bread. You had to have millions of Deutschmarks to buy a loaf of bread. Millions of them, because the money they were printing was worthless. So in President Nixon got us off the gold standard. Yeah, by the way, you already know, for almost 200 years, our government, when it was started, they said, we don't want big government. The percentage of government spending has to be very small in relationship to the gross national product of the economic cycles. Okay? So for almost 200 years, you know what our government spending was in relationship to the whole pie? 3% for almost 200 years. You know how much the government spends as relation to the total pie? Almost 50% today. Okay? It's actually 46 point something. All right? That means the government's half of our economy. And what does the government produce?
Nothing.
Nothing.
Okay? And so the problem is, folks, the American public said we want more and more benefits, we want more things, and we want the government to solve our problem. But who's going to pay for it? I don't want to pay for it. Okay? So that's what's happening in America, folks. We got everybody's relying on the government. Y'all heard the 4 biggest lies, right? 4 biggest lies in the world. I'll tell you the first 2. Checks in the mail. And hi, I'm from the government. I'm here to help you. Okay? It's another big lie too. All right. So folks, we've got to take over again, take control. But you got to do what's right, folks. You got to do what's right. And one of the best things you can do, here's what I'll tell you right now. Tell all my students, you can choose to not participate in this. You can opt out beginning today, all right? Because these would be the best years you've ever had. John F. Kennedy's dad, Joseph Kennedy, guess where he made millions? You know? Right there.
There were more millionaires made during the Depression than any other time in history.
Yep, and so you can make millions in this crash, folks. But you got to be knowing what you're doing, and you got to participate. You got to participate. And nobody participates on the downside. Everybody buys to go up. You can sell to go down. So you're going to have to learn to do that. But nobody learns to do that. So you got to look at the chart patterns. figure out which way is it going, and then try to determine, where my entry points are. But the charts, the cycles, all of these tell you the same things over and over again. You can look at cycles and use them on top of, everything else that you're doing. By the way, I'm going to give you an evaluation sheet for this class. This is strictly optional, but this puts you on my mailing list. If you fill this out, you are now going to be on my mailing list when I'm doing seminars and other workshops and those kinds of things. You're on my mailing list if you fill that out. Strictly optional, by the way. So let me open it up for questions. We've pretty much covered what this introductory program is about. So let me review with you. Number one, what's the first thing you have to have in place when you start trading and investing in the markets? Well, you have a plan first, and part of your plan must include a what?
Practice account.
Well, a practice account and a stop loss. Yes, you're always going to practice. Everybody's going to practice first. You must, so you have to have a strategic investment plan. I can show you how to design your own, and you must have a stop loss in place. Always in place. Thirdly, you must look at the charts in order to determine entry and exit points, because the charts tell you when to get in, when to get out. Okay? And so you look at charts to do that. So those are the three big things you got to keep in mind today. And then again, practice. You got to practice to make this happen. First, you got to have a strategic investment plan. All right, and we can design many different ones for you. I just showed you one, but the reason I showed you that one is because that'll work for you if you just do that one. Okay. Secondly, your strategic investment plan must incorporate stop losses. You must always stop out a losing trade. Okay. And thirdly, when you're trading, what was the third one? I can't even remember. I'm lost today.
Charts.
Well, the charts tell you entry and exit points. The charts, you got to learn to read the charts, because that's how you execute your plan, is by looking at the charts. And you got practice. Yeah, Paul?
You can set those stop loss limits in the software, say the trading company gives you.
Yes.
Yeah.
You can set them any way you want, and you're going to practice putting in your trailing stops. Asha, didn't you have some problems at first putting in the trailing stops?
Yeah. I know some.
Yeah, so she would lose money because she was not putting in the trailing stops properly, and it took her a while to finally figure out, here's how you put in the trailing stops. Okay.
So the greatest loss you want to experience is like 20% or?
Well, on a stock, but if it's a commodity or a Forex, it's a dollar amount, and it's the dollar amount that represents of your total pie. What's the percentage? So if you have a $100,000 account, typically you don't want it to be more than $1,500. If it's a $50,000 account, though, you may have to go to $1,500. So you have to work with it to see what your stop loss is going to be. On any one trade, you have to limit your losses, okay? On any given trade.
Roy, what would be the difference between if people were considering the two-day class versus the ongoing class? I mean, what factors would people want to put into that decision?
Well, the two-day class is strictly day trading, but you're going to learn some of the same chart patterns. By the way, if you decide to be part of the apprenticeship program, the day trading program is only $500. Okay, if you're already part of the group, then it's only $500 for those that are already part of the apprenticeship group. But so the day trading, though, is designed specifically to look at numbers, put them in, and make your money today or by tomorrow morning. So you want to be able to get in and get out, and that's how you start building your account. Because if you can start learning how to build it $300, $400, $500 in a day, then that's what's going to build your account up very quickly. All right, is making those kinds of trades. So you want to start building on the account as quickly as you can, and that's why Bob was saying, we put in our first trade, you see it making money, it feels good because now you know you can do it. But you knew why you were going in, see, and so now you know why you're doing this. I'm doing it because it did this. It broke a channel. It went above, this trend line, or did whatever we're looking at. And that's what I tell you on these advisories. I'm saying, hey, this is in a channel, this is in a wave, this is, so we keep looking at it because something's gonna happen. And then once you see it happen, you better be in, especially in your practice account. Yes, ma'am?
What's your opinion about buying gold? Since a lot of people are saying our dollars may not be worth anything, I hear people speculating, let's buy gold. What's your opinion of that?
I started buying gold at $500, $600 an ounce, so I've got the gold coins, okay? So, yeah, I mean, you're gonna need gold, but at these prices, I don't know, I probably, you know, I mean, it's just going like this. My experience is when you see a chart going up 90 degrees, gravity works on everything, okay? And so when you see a chart going up at 90 degrees, sooner or later, there's a good correction on the other
You should
side.
short it.
Okay? Well, I will know when to short it on that side, but
ETF.
the rule of thumb is it always goes up higher than what you thought it was going to go, and it always goes down lower than what you thought it was going to go, you know? So, you know, the markets are going to do, they're going to tell you exactly what they're going to do until they tell you they're not going to tell you, all right? But you got to be able to read the charts and figure out, okay. And this just takes practice. What's going to happen is as you keep practicing this, you keep practicing looking at the charts, eventually you're going to look at a chart and say, I know where that's going. I know that's going to make money, and you know where it's going to go. And once you do that several times, you prove to yourself. And again, it's not about me, it's about you. You're going to prove to you that you can make money. You're not going to prove it to me. You're going to prove that to yourself. And you're going to take what I'm teaching you and learning, but you're going to practice that and prove to yourself that you can do this. And that's the difference of what I've got, is that you're proving it to you, not to me. All right? And I'm guiding you through the process to make sure that you're looking at things correctly so that you understand it and take advantage of it. Okay? Any other questions? What did I not cover? What was some burning question that somebody might have had, or some topic that we did not cover?
Well, how is real estate, for example, if it's all going to go to hell for the next 14 years, the way that is real estate, or how does that play?
Real estate is going to also take a crash here too, not just the stock market, the real estate. Our whole economy is going to take a big hit. Okay? But I tell you, you can choose not to participate. You can opt out. All right? We can make these the best years we've ever had. And that's what I intend for me and my students. We're all going to have the best years we've ever had in this down spot. Because we know how to play it. We know what to take advantage of. Not just in the markets, but life in general. Yeah. Yes, ma'am.
You said you were going to talk about puts, option trading a little bit.
I don't know if we put it on this one, but I mean, options is another completely different topic. And basically, when you're buying puts and calls, you're taking advantage of. If it's a call, you're thinking prices are going up. So you're buying a call saying it's an option to buy at a certain price. So you want to buy it here, and hopefully it goes up higher so that you can buy it here and turn around and sell it higher. A put is you expect it to come down, so you have the right to sell it here, and you're hoping prices come down here so that you can sell it at a higher price. Okay? So again, it's a completely different topic.
That's a leverage thing.
Yeah, and by the way, though, I want you to be aware, because a lot of people walk out of this class and go buy options trading programs for $5,000 and $10,000. What is the percentage of options that lose money? What's the percent? Any of you know? 80% of all options lose money. So the minute you buy an option, you've already put yourself in a position where the odds are way against you. So you have, in options, you have to know what you're doing. You have to know, you have to be able to call the markets right. And even if you call the markets right, a lot of times if it didn't happen fast enough, you're going to lose your money.